Right now, we've been getting you top voices through the day. Another two big fund managers are joining me right now on the phone line is Pankaj Murarka, veteran fund manager, now of course runs Renaissance Capital, and Anand Shah in his new avatar at NJ Advisory. Gentlemen, both of you, thanks very much for your time. Anand, let me start with you. You guys at NJ, of course the mutual fund arm is just launching, but the pedigree comes in for decades of working very closely with the investor community, having seen cycles in your previous avatar as well as a fund manager. What is the intelligence you're putting together? Because of the number of distributors NJ has across the country and your own understanding of the situation, what is the intelligence you're putting together on what's happening in the market right now?
Hi, very good afternoon, Ajay. I think importantly, as all the captains of industries are also telling you that this is more than a stock market crisis, it's a health crisis. I think if we can address that issue, and which is what is the need of an hour, and that is where not only the government of the day, but the industry captains and even the citizens at large are trying to, with the help of this social distancing, trying to make sure that it doesn't become a community spread as it has become in the rest of the world, particularly in parts of Europe and US. So I think one thing needs to be understood is it's not so much yet, I would use the word yet, a sort of a crisis on the economy and on the markets as much it's a medical crisis, which eventually can become a sort of a financial crisis. So I think that needs to be understood. And to that extent, everybody needs to work to make sure that this doesn't become a very large medical crisis, which in turn will become an economic crisis.
How are you dealing with what's happening right now at Renaissance Capital? Is there eagerness of your clients to come to the market at these levels? Are you having cash on the table or you're just observing things?
Well, Ajay, clients are completely frozen, right? This is an event which is playing out probably, we haven't seen something like this in the last 100 years, and probably this is the worst crisis that the world is seeing since World War II. And as Anand rightly pointed out, it's not just about markets, it is about things much beyond that. It's about humanity. It's about survival. Markets are a mechanism where they tend to price in what they see in the near term, and clearly markets are pricing in extreme fear and extreme risk at this point of time. If you go back in history, and that's what markets are supposed to be doing. Go back in history, meaning markets have always been open and functional even during times of war, be it World War I or World War II. So clearly these are not normal times, these are extraordinary times. And I think it's time to deal with it with some more, with a great amount of calm and patience. Clearly, I think now that governments globally have awakened to that, they are responding to it either through suppression, lockdown, and at the same time, I am very hopeful that I have complete faith in science, and I'm sure over a period of time we'll be able to find a medicine to come over it. From a purely markets perspective and how we're approaching it, I think we're just taking it very calmly and patiently. Obviously, we have some cash in our funds, some of which we have put to work, and probably we intend to put that to work over the next few weeks. From an investor's point of view, obviously they're completely frozen, but I think that, there's times, if you're a long-term investor, you cannot afford to not invest in times like this when the world is completely topsy-turvy and what markets are trying to price in is completely end of the world. We can clearly see a lot of large-cap companies, which are trading at now single-digit multiples. Once we get over this crisis over the next few weeks or probably a couple of months, I think the world will move on. And some of the large businesses, solid businesses, if anything, their earnings power and the ability to grow earnings will only improve because some of the weaker businesses will suffer collateral damage because of this crisis. So I think for a long-term investor, this is one such event which you can't afford to miss or ignore and not put your money to work if you have money at hand.
Pankaj, let me ask you a question which I've been asked a lot of times in the entire weekend. A lot of investors, are probing because, the fact of the matter is that just 4% of us Indians actually invest in equities. Bulk love real estate, gold and FDs. A lot of investors now are curious that are these the time to come in? Should we, at this juncture of the market, should we jump with lump sum or should we make staggered purchases in large caps because they've become as attractive, if not more, to a lot of mid caps? 2 to 3 year far out, that kind of horizon. So some very mature questions are coming to the table now by a section of the market which was just observing the market but was not adequately invested. What would you like to say to people who have adequate solvency for a couple of years and also get incremental little cash every month? What would you tell them to approach this kind of a market?
First and foremost, we need to understand this, that Corona doesn't mark the end of the world. The casualties or the deaths that will happen because of outcome of Corona, even in India or globally, will be much less than the casualties which the world would have witnessed during the Spanish flu or during World War II. Yeah, so this is probably going to be a much less lethal event than what the world has witnessed in the past, and this does not mark the end of the world. Once we get through this, I think the world, today there is complete lockdown and complete dislocation in the world. Obviously, this is worse than World War II because even in World War II, we did not have a complete lockdown of the world in unison at one single point of time. Yeah. Once we get through this over the next few months, I think the world will move on. And in which case, businesses, solid businesses, robust businesses will do well. And if at all anything, they'll do much better going forward. From an investor's point of view, who are sitting on cash, I think this is a great time to put money at work. Probably they might not go out and put all your money at one go, but you can just spread it out over the next, I think over the next 6 to 12 weeks. That's my best guess. As we say, in one of the cardinal principles of investing is you have to buy when there's blood on street. Yeah, and that's the time when you get valuations which are extremely attractive. Today we have businesses which you can buy at large businesses, large cap companies which you can buy at single digit earnings. That is what exactly happened in US markets during World War II when the Dow itself was trading at a single digit multiple of about 10 times. You can find a lot of businesses which are below book value, where market is pricing either those businesses will unwind or extreme distress. There could be some businesses which could be distressed, but that's not going to be the case with large part of the businesses. So I think it's time, if you have cash, to show your conviction. I'm sure it's very challenging, but one needs to put money at work.
The speed at which the market has collapsed also, economists we speak to say that is pricing in collapse of economic activity. What are your thoughts there? If the economic activity in India collapses, say, for a quarter, and we are staring at a negative growth quarter on the economic front, still the numbers which are coming out for 1 year forward on the macro front are positive, 3 to 4%, depends on who you are reading. Do you think market is going on the other side to factor in too much pessimism now, looking at these valuations? Anand?
Hi. Sorry, I didn't know you asked me. So very clearly, markets trying to give a message out that, what the current. So there are two situations here. One is to understand. One is what's happening in India. The rest is what's happening in the Western world. And unfortunately, the Indian equity markets is reflecting the moods of both the markets and especially the Western worlds. Today, if you've been seeing the data all along in the markets, there's a huge selling from the FI investors, where what they're seeing in their own countries and its impact on their capital markets, the strengthening of the dollar leading to money moving back out of the country. So part of this sell-off, whatever selling we are seeing in the market is also technical, which is part of you being a part of a globalized world, especially our equity markets is more globalized than our economies. Second, as Pankaj said, it's also telling that maybe the situation in India will get far worse, as you are saying, that you might have a significant slowdown in the economy in quarter or 2 quarters to come. But to me personally, today the valuations are such that we can live with this slowdown. So to give your answer to your investors or to the investors at large is your viewers and investors at large is that today the markets will remain volatile and it will stabilize only when we will see some sort of a sanity as far as uncertainty around the virus and its medical implications for the larger population is concerned. And to that extent, we'll have to live with this volatility, but rightly so, we would have to put the money at work given the valuations are extremely attractive at this point of time. And we, as and when we see some stability on the health front, on the spread of the virus front, we'll see some stability in the markets as well.
All right, gentlemen, Anand and Pankaj, both of you, thank you so much for your time chatting about the investing landscape with me today on the show. Thanks very much. Goodbye.